Welcome to the Work System podcast, where we help entrepreneurs make more and work less using systems. I'm your host, Josh Fonger, and today we have a special guest, Matt Baker. Matt is a money strategist and business coach, passionate about helping entrepreneurs solve their most challenging problems. Matt is the VP of Corporate Strategy and International Expansion at FreshBooks. All right, Matt, welcome to the show. Before we get into the difficult, hard questions, why don't you give us the backstory and tell us how you got to be the VP of Corporate Strategy at FreshBooks?
Hi, Josh. Thanks for having me today. I've been at FreshBooks for about 4 years now, but prior to that, what led me to FreshBooks is probably two specific career opportunities. One is I worked at Google for about 3 or 4 years in a space that started taking consumer products that were popular and packaging them up for small businesses. So you could think of this like Gmail or Calendar or Documents. And now today you can buy it as a small business and put your own logo on it and have that experience. And so that was a great experience for me to understand what the small business market's like, getting involved with software as a service, and sort of dipping my toes in a lot of that. And then the other experience is I did another 3 or 4 year stint doing management consulting. And that taught me a lot about what does strategy mean as a word, because it sort of means something different to everybody, and what these projects within large companies really, how they really work and what it takes to get stuff done. And so I've hopefully taken those two experiences and brought them to a company like FreshBooks.
Cool. So before we get into FreshBooks and managing your money well, what's something you learned from management consulting? Because you and I talked beforehand about kind of the larger companies you worked with, and most people in the world and listening to this have small companies. What's some things that big companies do that really small companies should learn from?
Yeah, that's a great question. I think when you brought that up, the first thing that popped into my mind was more around a strategy that we used at McKinsey that I think can be relevant for a small business owner. And a firm that has a great reputation and tends to charge high fees, you generally think that you can just price your way into projects and you can get to work. And what I found that where the market was going while I was there was this concept of what we called putting fees at risk. But essentially it was being open to the pricing model and not charging everything up front, but instead giving people less commitment up front, but trying to get some upside on the relationship or on the work that you're proposing to them. So effectively, instead of saying, hey, we're going to charge you, hundreds of thousands or millions of dollars, whatever you might think, but you could still get there in the end, but you're open to saying, okay, I'm going to relax sort of the upfront commitment of fees. And so I think a lot of business owners are starting to think about different pricing models as well. And so it could be just as simple as having multiple different types of tiers or packages that you offer, but it could also be understanding, what kind of client you're trying to bring on. And if they need some enticement, one way to do that is through a more flexible pricing.
So with that, I guess maybe it leads to another question. With pricing models, because everyone comes here with their own pricing model. And I had a client just yesterday who was at the top of the market with how he prices his product. Do you suggest going to the market to find out what they want, or special offers that expire, or kind of a foot in the door technique where you get them to buy something and then the second thing is much higher price, or what are you exactly you're talking about?
Well, the first thing I would generally try to talk to someone about is just one, recognizing that lots of big companies have full teams that are devoted to pricing. And so it's a complicated and it's a challenging piece. But if you're doing it all on your own, I would say that there's a couple best practices you could look at from your own buying techniques. So a lot of people tend to just price per hour, or they just have a flat project fee. That is a very simple approach, but oftentimes it leaves opportunity on the table. And so what I would say is you could do something as simple as just having 3 packages in sort of low, medium, and high. And what that does is it allows you to capture a bit more from the folks that are willing to pay more, but it also sets expectations for someone who picks a lower package. They're not going to then also expect that they're going to get everything. So it kind of can benefit both sides of that. And it takes a little bit of trial and error, but I think that self-selection is a way to segment your clients. And sometimes it's just really hard to do when you just have a flat fee or an hourly fee. You're trying to do what's best, but it sometimes just leads to misset expectations on both sides.
Yeah, no, I think that's especially for your market at FreshBooks. I think that's a great simple move. I'm thinking of the guy who does our pools. We would like more services, but they just have a flat fee. And we're like, we would like this other stuff. We pay for it, but it just, this is just the thing. Yeah, it's all simple stuff. Well, good. So let's get into some of the things I was reading about your profile, which is these 7 financial habits. And I wanted to get through all 7 and not lose time. So part of your bio says that, because you've worked at FreshBooks, because you do a lot of surveys, because you analyze the market and you have a huge list to go to. What are some things that you all have learned about financial management?
Yeah, well, thanks for bringing this one up. This, sometimes packaging up in a rule of 7 can be helpful to try to remember it. But this stems from an annual report that we do of people who are working for themselves. They might call themselves a small business owner, or they can call themselves a consultant or a professional or a freelancer, but it's somebody who gets the majority of their income from self-employment. Mm-hmm. And so we survey those folks and we ask them a number of questions. A lot of it is trying to get into their mindset, but a lot of it also is understanding what are some of the behaviors and habits that you do financially. And then we also have the data from that survey around, well, how big is their business? How is it growing? So then we can kind of compare how you answered the questions on behavior to what your results are. And we found that these 7, and I can certainly go through them, but these 7, there's only about a quarter of people who follow all 7. And then if we look at how are the businesses of those 25% performing versus the other 75%, they are much healthier, either in terms of income or clients paying on time or other ways that you measure success. So by and large, we took from that this opportunity that if you can follow these 7 financial habits, you're going to really set yourself up for success as a small business owner. And then the other thing I'll just mention too is it's not as though any one of these was not being done. It's just somebody necessarily wasn't doing all 7 together, which hopefully can unlock a little bit more of the business health. But an example would be, number 1 is just regularly review your finances. A lot of people may avoid that, or they just don't have a consistent, regular way to look at that. It can be something as simple as, comparing, income in from month to month, or comparing your cash balance in your bank. But regularly reviewing your finances is one of these financial habits. You learn also, by the way, the natural ebb and flow of your business. Maybe it's not seasonal, but it's definitely a term that I use a lot called lumpy. And so people, sometimes, could see a lot of money in the bank account one day or one week and not a lot the next. And then, sort of overreact to something like that. But if you can look at it regularly, you get an idea of what's really in or outside of bounds for what you should expect for your business.
Yeah, good.
The second one is maintaining a budget. This is, you could do this on a personal level, but certainly for your business. And in my mind, it's really just saying what you're going to do in advance of doing it. And so it could be saying, how much am I going to spend, or how many new clients am I going to get, or how much revenue? So a budget's not just the spend, but a budget's sort of a financial projection for what you want to do. And then you can compare yourself to your budget. That's a very common practice for larger companies, especially when you have dedicated staff that have a finance role. But when you're doing it all yourself, you sometimes skip that step. But I would certainly recommend even just annual goals as a way of, thinking of it as like, that's a bit of like a budget, and then you can compare yourself to it. It's a lot better way of understanding your progress as opposed to just in the moment, how am I feeling about my business from week to week or day to day. Number 3 is setting aside money for taxes as a financial practice. And this is this concept of, you could draw any number you want, but call it 30% roughly of all the money you make is not really your money, it's the government's money. I don't think that that's news to anybody, but at the same time, having a separate account and pushing that money in there right away is a great practice to have. The worst case that I've seen in talking to people who are self-employed and small business owners is if they spend it at the wrong time and then tax time comes and they don't have it, then they're taking out a line of credit or they're borrowing in other ways to pay the tax man. And then it creates this cycle, and then you fall behind and you're doing some of those things. So, if you put it aside, you can always dip into it if you have to. I mean, at the end of the day, you're holding it, but you're holding it on behalf of the government. And then once you get going in self-employment for a while, then you start to pay it quarterly as opposed to an annual bit. And then it becomes a little bit more, systematic. But the big part is just setting aside that tax money, because the best way to think about it is it's not even yours to begin with. And by the way, once you start setting aside, maybe that helps you understand your pricing model too, that we talked about a little bit earlier, because you might realize, hey, I'm not I'm not pulling in as much money as I thought in this account that's meant to be, meant to be profit, or meant to be, money for me. Number 4 would be proactively reducing debt. The biggest one I think is often credit cards. When I talk to a lot of small business owners, they're borrowing money without thinking of it as borrowing money. They're using credit cards, which is a way of borrowing cash. So they might not have a formal relationship with a bank where they have a line of credit, or they're borrowing money against a mortgage or something like that, but they're borrowing money through a credit facility. And if you don't pay that down, the rates are just sort of crazy. And we hear about this more in a personal sense, but it extends into the business world as well. So proactively, reducing that is a great way. By the way, taking on debt's not a bad thing, but once you have debt, you have a plan to pay it down. The 5th one would be the people the people who pay themselves as though it's a salary is a strong practice. And so you can think of it like everything that's left over is mine to keep, or you can try to set it up front that you have a pool of money that represents the business and you're paying yourself, out of that in a consistent way. But that is certainly a best practice, is to pay yourself. One of the things that we see a lot is that people sort of mix their personal bank with their business. Obviously because of the market that we're in, we serve a lot of people who are a one-person business, or maybe, maybe only a few people. Certainly we have people that are 20, employees and up, but in that small group, a lot of times people are still using their personal bank account. And so anyway, the point is, to certainly pay yourself a salary from it. Number 6 is to take the time to establish the right, what I would call business structure. So a lot of things start off as a sole proprietorship. Maybe you'd be better off as an LLC, or maybe you want to create an S corp. There's a lot more liability, or a lot more sort of recurring oversight you have to do when you're a corporation. But at the same time, if you talk to a professional and their benefits for you, it'll pay off in the long run. And so having that conversation on what's the right structure for this business, if it's going to be my source of income, it's worth having that conversation. So proactively picking it is number 6. And then the final one is the practice of maximizing write-offs. Some people do it. They have an app that tracks mileage, for instance, so that they don't miss out on that. Others have a system where they're categorizing, expenses, or there's lots of software where you can link your bank account and it'll help you categorize and things of that nature. But, just not leaving that money on the table. Everything that you can, itemize as an expense, reduces your taxable income and, effectively helps your business, going forward. And so, just to put a punchline on that, what we found is that, any one of these individually, at least, 25, 30 people percent of people are doing it, but it's just very few that are doing all 7. And those that, commit to that, have had really, really strong, results for the business, which is great.
Now, couple of different directions I could go with this, but of your survey, at what point financially, sales-wise, did companies start to do all 7 of these things? Because I'm thinking of the person who's making 50 grand a month, 50 grand a year in their business, and they're just starting out, they're struggling. They're probably not going to focus on these 7 things. At what point do people actually mentally start saying, no, I actually get structured and put these 7 things? Is it when they get to $500,000 a year or $1 million, or when is it?
For us, what we mostly see is that there's a mark in people's minds called, $100,000, or they might think of it as 6 figures. That is the first, sort of big milestone that a lot of people that switch to working for themselves want. It may be just as they're thinking about going out on their own, that's an income that means that they've kind of made it, or maybe that replicates a little bit more of if you're switching from a traditional job to self-employed, that threshold means that you can now support yourself. But that's the biggest one. When we looked at it, I think within the folks that are doing all 7 of those, it tends to be more of above sort of $250,000 annual revenue is probably the more likely threshold. But the need to think about, okay, I'm going to treat this more, as a legitimate business, and people's minds tend to be that 6-figure mark.
Okay, so 6 figures, it's a real business. $250,000, you got to be doing all 7. I mean, you should be doing all 7 anyways, but the idea is then people really start making that shift. Now, this is kind of a leading question, but should somebody do all 7 of these themselves, or are there people who can do these things for you? Because I'm thinking as a business owner who really loves to sell their service or do their service, the idea of doing all 7 of these sounds like drudgery that they just will never do.
Yeah, I mean, that's part of the challenge too, is that a lot of people that get into the business, running their own business, they like their business. They don't like doing the finances for their business or doing the accounting for the business, but they like what they're doing. And so this is all, in a way, considered overhead, or this is all like the necessary evil of running a business, so to speak. So if you can get help, I certainly recommend it. I think it's hard to try to, figure it all out on your own, because you're trying to figure out a lot of other stuff too. Some of the stuff, I believe, like regularly reviewing your finances, you don't want to completely, delegate that to someone else. You want to have an understanding of it. Whereas something like, what's the right, structure for my business, I think you definitely want to lean on a professional. One of the other surveys we found was, we asked folks out, who are small business owners out in the world, what do you do yourself versus what do you outsource? And we found, like, an example there was, we found a lot of people try to do social media themselves. And once we dug a little bit deeper, it feels like, they had this sort of fear of missing out, which you might call the FOMO. And so they feel like they got to do social media, but at the same time, they're not an expert. They're not really committed to it. So they're kind of there, but they're not really getting any value out of it. And so then you're stuck in that, worst case of all, which is you're spending time on something, you're not getting any return. So the idea, there is a great one where if you can outsource it to somebody that can really, help you get value, then that's going to be a lot better than what you're doing. Or maybe you just got to, pull back and focus on the other things that you really care about. But, I would put these 7 in a similar thing, which is, you want to be able to do them. If you can take it on, then I think you're going to be stronger, financially. But at the same time, there's lots of, consultants and resources out there to help you do these things more programmatically, and also just more effectively.
Yeah. And if you're watching this and you're getting overwhelmed, certainly shoot me an email at info@workthesystem.com. I have some resources on these things. So when I look at this list, I was thinking to myself, all the things that I don't do, people do on my team, but I don't. The idea of doing these things is just painful, because I used to do forecasts for other companies. I used to do budget for other companies, but I like people who are experts, who know the laws, who know the ins and outs, who knows the best practices to do these things for me. And they show me how much money I'm saving, and it's all by doing these 7 things. And it pays for what I'm paying them, 10 times over. So it's always worth it. Even if you're just a small company, you got to do these things because, and if you're not going to do them, pay someone to do them, because it does pay for itself quite easily.
If I could just add one thing on there too, is I also think if you're feeling a little bit overwhelmed by, it's 7, it's not 2, right? So it's more, and then these things have their own names. I would just maybe double click on something like a budget as an example, and say there's lots of different budgets out there, and the budget that you may have seen at a large company that you worked for is completely different than the budget that you need when you're running your business. And so I do think there's a simple way, and one way that I try to make it real for myself or for others is this idea of how many new clients do I need to bring on each month to feel like my business is growing? And then that, in a way, can act as your budget. And then every month you can kind of check and see if you're on track for whatever you set out to do in advance. So it can definitely be a much simpler way of defining some of these terms.
Yeah, definitely. Well, this is great. It's a great list. And if you missed it, check the transcripts on our website, and you can find the list of 7. Well, good. Okay. So I wanted to ask you about, we were talking beforehand about the FreshBooks compared to other services. I mentioned that some people on my team, contractors I work with, send me FreshBook receipts. I mentioned that the accountants I work with use QuickBooks. A lot of my clients use Xero. There's a lot of things out there. They each have their own use. Can you kind of explain to people who are just getting started and maybe they're looking to switch softwares, what the differences are?
Yeah, I'd be happy to. I think there's a lot of options in what I would call the category of accounting software. And so you mentioned a few like FreshBooks and QuickBooks and Xero. What generally tends to differentiate us is we start with the idea that you need to create an invoice so you can get paid, and you want to do it yourself. And so if that's where you're coming from as a business owner, is I need to send out invoices and I need to get paid, then we're going to be a very simple tool for you to do that. And then you get sort of the accounting benefit because you have all this information in one place, so to speak. And so you use our system to create those invoices or track time in order to calculate how much you want to put on the invoice, or track an expense in order to rebill it to your client, things of that nature. And so it's often built for the non-accountant in mind, and then you can collaborate with your accountant as you'd see fit. And we generally view the market of the more traditional accounting software, like a QuickBooks, is for an accountant to manage your books. And a lot of people get fearful of jumping in as the business owner because they don't want to mess something up, or they don't know how everything's set up. So, in practice, it tends to be that a product like QuickBooks may be more used by accountants, whereas a product like FreshBooks may be more used by the business owners themselves.
Yeah. I like the differentiation is the simplicity, and for people who want to do it themselves and who don't want to add complexity, just jump right in, use FreshBooks. Now, also with the surveys that you do, a lot of my clients will come to me, I'm sure listeners, have cash flow crunches throughout the year or different seasons. And did you learn anything through your surveys that have told you what to do during cash flow crunches or how to prevent them? Any strategies about that?
Well, the thing that comes to mind that we spend a lot of time talking about is just the idea of your sort of accounts receivable cycle. Okay. I know that can feel like jargon, so let me maybe rephrase that is, the sooner you can get paid, the more you can avoid cash flow crunches. And so we've tried to glean from who are the most successful business owners out there, like what are some things that you do to make sure that you get paid on time? Because what will happen is you send out an invoice, and particularly if the client is bigger than you are, they have some process whereby they pay out invoices, and maybe it's in 90 days, or maybe it's at the end of some other billing cycle. And so, and even though you sent out an invoice that says it's due immediately, it doesn't mean that your client, sort of treats it that way. And so that can create the cash flow crunch when you're not getting paid as quickly. So what we've found in terms of ways to get around that, one is to look at some ways of doing automated billing. So there's some tools online where you can either get that acceptance in advance that you'll be able to charge them, or you have a tool that allows people to pay online. So that's a simple way to just get paid faster. Another one is there are services that do invoice reminders. So a lot of times when somebody's not paying as a business owner, it's just a drag to have to chase them. It was a pain to create the invoice to begin with often. And then if somebody's not paying the invoice, then it's like, oh, I got to spend this time kind of chasing them. And so if you have software or system in place that does that chasing for you, it can feel like you got a team member, even though you don't have, somebody dedicated to your receivables. If you have software, you can just feel like you got somebody on your side. And it's configurable so that you can send those reminders at whatever cadence you want. And you could also send them and trigger a late payment fee. And so then all of a sudden, the invoice they got to pay is more because they didn't pay it on time. And so, you got to use those carrots and sticks, so to speak. Not too liberally, but it's a great way. And then the other thing we noticed, we did this simple kind of survey, which was kind of a lot of fun at the end of the day. But we just looked to see how often are people saying the word please or the word thank you in an invoice, and does that actually mean that they get paid faster or not? And what we found is that, by and large, more polite invoices do get paid faster than the non-polite ones, or just the ones that aren't overtly polite. And then what we did is, what made it fun is then we looked at, we sliced our data by state and said, okay, well, what are the most polite states out there versus the most impolite states? And that's what kind of made it fun. I think Oklahoma was at the top of the list in terms of, the most polite invoicers. But that's an example of, that language can help. Also, there's other language you can put in there, like the terms and, payment methods and things like that. So I would say there's a collection there that we've kind of gone through, but 4 or 5 things that you can really do to try to speed up your receivables, which then help you avoid some of those cash flow crunches with your lumpy income.
Yeah, I love it. All good ideas, and that is one thing I've noticed whenever I receive FreshBook invoices is the friendliness of the design and the word and stuff like that. That is differentiator. It's amazing, those little things. One thing that came to my mind, I learned early on in my career, is that one of my, this was when I was an employee at a company, every time they received an invoice from any vendor, any contractor, anybody who helped them with anything, they would always try to pay it as soon as humanly possible. And the industry I was in was the construction industry. So it was usually 30, 60, 90 days to pay. They always paid within like a day, everybody they worked with. And because of that, everyone wanted to work with them because everyone was like, wow, if I work with this company, I'm going to get paid quickly. I love working with this company. So they had the best service and best support from everybody that worked with them. Not because they paid more, but just because they paid faster. And I always thought mathematically it's better to pay slower. But they had a strategic advantage against everyone else because they paid faster, which I thought was pretty interesting.
Yeah, that's a great story because you're exactly right. Is that the common feeling is that everyone pays slower, and so if you're looking to differentiate yourself, maybe that's the way to do it. You just pay on time, and all of a sudden you're viewed as a great partner to work with.
Yeah, but I mean, using just mathematics to be like that's the worst idea ever. Other thing that worth noting is that if you are going to get your AR accounts receivable cleaned up, try to. It's a kind of a one-time thing. So if your average ARs are 40 days and you get them down to 10 days, you're going to have a big cash influx, but you can only do it once. So don't think, oh, I'll do that next month because you can only do it 1 month. Then you pretty much use that cash wisely.
Yeah. One other thing I didn't mention explicitly, but is probably worth mentioning too, is just this idea of breaking up work into to milestones, or you could call it a milestone-based pay, but a lot of times you just fall into a bit of the habit of, doing work and then getting paid for that work after you've done it. Mm-hmm. If you can put up the time up front and break it down, maybe you can get 3 installments. And so you're collecting cash along the way based on milestones. It's just another way to avoid that, the cash flow crunch.
Mm-hmm. Yep. Yeah. And I suppose the easiest, or even getting better than that, is getting paid up front or as much as you can push that. Well, yeah, all great techniques and great ideas. We're kind of running low on time here, Matt. Let me ask you this. So what's one question that I should have asked you, but I didn't so far?
Oh, wow. Okay. Well, I think the one that comes to mind that I try to spend time on with folks is the one skill that I think is the most important skill for a small business owner looking to the future and trying to protect themselves for the future is the ability to sell. Mm-hmm. It's often sometimes that things that people want to avoid and not spend time on. Our research says that people spend on average about 20% of their time in a prospecting type of capacity. Mm-hmm. And so I don't necessarily see any issue with that kind of time allotment, but being good at that and having a way that you can get new clients, to me, is a real differentiator out in the market to have a sustainable business. There's a lot of platforms that are coming up that help you get clients. In a lot of these, they're covered in the news a lot, whether it's, driving a car or delivering food or packages or whatever. That there's a lot of platforms, or there's marketplaces online if you're a tradesperson or whatever, that'll match you up. But what's happening is a lot of these marketplaces tend to set the price, and then you become more of a commoditized, kind of worker on behalf of this platform. And so your ability to go out and find your own clients then unlocks a lot of opportunity to do things like set your own prices and set your own projects and, pick and choose which clients you want. And so more and more, the ability to do that is, anyway, it just sets you apart. Maybe a better example from a traditional sort of business is think of a flower shop. Mm-hmm. A lot of flower shops got into the business of serving, sort of being a distributor on behalf, or a deliverer on behalf of 1-800-Flowers or something like that. They would get all their customers coming in through some aggregated sense, and then they were just out there doing it. But then, that company was taking a third of all the revenue, and, they were dictating the terms to the flower shop, as opposed to the flower shop being able to go out and get their own clients and then build their own business. So, if I were to pick one of those two models, I would say absolutely, learn how to sell yourself, and you're just going to set yourself up for so much more success in the long run. And you probably, had your own experiences with that being a consultant, and, the ability to go out and find work is a real differentiator for a small business.
Yep. Oh yeah, definitely. I mean, there's plenty of good coaches and consultants that are starving because they can't get any clients. So that is one of the hardest things to do in the industry. Well, so I guess I have one more question I want to ask you. Just because of all the survey and the data that you guys gather, I'd love to kind of get predictions about the future. So where do you see the future of work going? Because there's so many people who are choosing to do side hustles and self-employment and moonlight and do extra hours, and your service is great for helping people do that. What do you see that going? Is it going to continue to grow, or will it eventually just hit this equilibrium where, because I don't think we've hit it yet. So what do you see 10 years from now?
Yeah, I think, well, the interesting thing too is if you wind back far enough, everybody works for themselves.
Yeah.
You know, like the corporation's kind of a newer type of thing. But if I kind of look out now from where we are today, given the next 10 years, I do think our data shows that there, you know, tens of millions, call it, you know, 20 million and above, that have a traditional job today that want to work for themselves. And it's mostly driven by this idea of control. You get to control who you work for, you get to control your time, you get to control the work that you do. It's all these things that you kind of don't have sometimes when you feel like you're stuck in a traditional job. However, what I'm kind of seeing, one is I do think we're going to see more people that decide to go it themselves. And there's a lot of platforms you can do that. You know, Shopify is a great example where you can just set up an e-commerce shop overnight and you can use a third party to fulfill it. And so if you're good at, you know, driving sales, then all of a sudden you got a business. But so I do think more and more people are going to try to go out on their own. However, I'm also seeing, you know, from conversations that I'm having, that a lot of companies are now understanding this idea of control, and they're trying to open it up a bit and find ways. You know, companies like IBM have been known for years to be very remote work friendly, but lots of other companies now, you know, are maybe an entirely remote work environment where everybody, you know, kind of works from home, or there's other flexibility built into that where, you know, you have more control of your schedule and more control where you live. And anyhow, I think corporations are trying to address that growing need, but by and large, I think it's moving towards this idea of let me maybe frame it this way for you. Climbing the corporate ladder is no longer sort of the dream. It's more about having an independent career in which you're feeling fulfilled by the work that you're doing, and you're making enough to live and support your lifestyle. That, you know, and you're getting these experience. Even in the corporate world, people are switching jobs every 3 years on average now. And so this idea, you know, the pensions are gone and so on and so forth. So I'm kind of hopping around a little bit, but the idea is that, you know, when you get a job and I'm going to stay in this job for 30 years or something, is just not really the mindset of anyone anymore. And so as you make a move from one employer to the next, eventually one of those moves can be, oh, I'm just going to go on my own and try to stand up this, you know, agency or consultancy or firm or what have you. So anyhow, I see a ton of exciting stuff, you know, happening there. And so I think, you know, lots of people are going to move forward, but I also think that, you know, the corporations and organizations are trying to adjust as much as they can.
Okay. So the appeal to go out on your own was really high, but now it's maybe waning a little bit because of the corporations adapting, but still the appeal to do it your own way is always going to be there.
Well, so I was just going to say, I think that's absolutely right. And I think, you know, there are some real barriers that people see, like healthcare, for instance. You know, there's a real risk in people's minds of making the switch if you're already protected. And, you know, corporations protect in a lot of ways. They make sure that those things we were talking about before, they make sure you save for taxes because they take it out of your paycheck, or they give you health benefits. They make sure. And so when you're on your own, you got to do all that yourself. And that can be a big burden to try to make the leap. But in terms of aspirationally, I think, you know, it's moving towards a world in which people want to feel more independent.
Yeah. Well, those of you watching this podcast, there's one I did a live stream a few weeks ago addressing that issue with the healthcare. There's a health share plan for business owners, small business owners. It's very, very interesting, low cost. So the market is trying to supply that solution, because that is a big fear of people, is losing their healthcare, losing their benefits, and it's hard to make those things happen. All right. Well, Matt, I won't take any more of your time. Where can people find out more about you and FreshBooks?
Thank you. Certainly, FreshBooks.com has got, you know, it's where you can go and create a free trial. It's where you can go and get all the data that I talked about. You can look up the team, including myself. And then personally, you can find me at mbakerson on Twitter, and look forward to connecting.
Okay. Awesome. Well, Matt, appreciate it. I really learned a lot. I took a lot of notes, and this is great. Managing your money is critical, obviously. Otherwise, your business doesn't last. So everyone who's enjoying the podcast, stay tuned. Next week, I'm going to have another expert like Matt on to share their wisdom, maybe one of my coaches or one of my clients, and we'll just share with you how to make more and work less. And if you want a copy of that book right there behind me, Work the System, you can get it at workthesystem.com for free, or you can win a copy. All you have to do is leave us a review at either Facebook, YouTube, iTunes, wherever you're watching this or listening to this. You can leave us a review. Take a screenshot of that review and email it to info@workthesystem.com. And then we'll be pulling one name out of a hat a week and mailing you a copy of the book. Everybody, we'll see you next week. Thanks.
Thanks, Josh.